Thanks for the introduction, Paul. And thank you all for being here today. It's great to be here in Adelaide and for another great Read Corporate event. And I'm looking forward to talking about Astute Metals and about how we are going to create value through discovery. So we've got a strong portfolio of exploration assets, and we've got a great leadership team and board that are laser focused on creating value. And the investment proposition here is relatively simple. We've got two large-scale exploration targets that we're going to go out and drill test in the next 3 months. The first one is a large copper-gold potential target in the Northern Territory in a new belt called East Tennant, highly prospective for large copper-gold systems, where we've generated a bullseye gravity target. It's situated between two faults, and it's got nearby copper and uranium mineralisation in a near-miss hole. We're going to get on the ground, and we're going to be drilling that one mid-year. The second one is going to kick off in about a month's time. It's at our Red Mountain project. It's located in Nevada. It's the lithium capital of North America. We have a tenement with a large soil anomaly, 8 kilometres long, up to 2.8 k's wide, and we're going to be out there doing some drill testing, 1,500 metres we're going to put into the ground in starting off in early May. So we've got a great board. We have excellent projects, and we're going to go out and test them. They've got the exploration criteria that will look like bringing that potential into reality following spinning some rods. Just on our board, Tony Leibowitz and John Young, they're both ex-directors of Pilbara Minerals. Tony was one of the founding directors and was involved in taking that company from a $2.5 million market cap up to $1 billion. And John was instrumental in its success a little bit later on after Tony. Myself, I'm a geologist by trade. I've been in exploration and resource development for 18 years. I spent a good chunk of my career, about 14 years, looking for iron oxide copper gold deposits in northwest Queensland. So it's a really natural move for me to shift over the border into the Northern Territory, where we have this new copper gold province that's been identified by Geoscience Australia. Just a corporate overview, 410 million shares on issue. Our market cap's about 11 million at the moment, and we have $2.5 million in the bank as of the end of the last quarter. The top 20 shareholders hold just under 70% of the company, so it's pretty tightly held, and we enjoy good support from those shareholders. So these are our projects. In Nevada, we've got several lithium projects looking for lithium clays, which I'll talk a little bit about later. In the Northern Territory, Georgina IOCG project, and in Western Australia, we've got what I describe as a legacy asset. It's a heavy mineral sands project that we've been working forwards to a scoping study. So kicking off with Georgina, it's a large new area situated between Tennant Creek in the Northern Territory and Mount Isa in northwest Queensland. And both of those are historic copper and gold mining districts. Between the two, there's some cover rocks, and so you can't see the basement, you can't see copper mineralisation at surface typically. So Geoscience Australia, about 5 or 6 years ago, started doing some investigations into whether these rocks were prospective for anything. And that work took about 5 years, culminated in a national drilling initiative program, and the result of that is it's overwhelmingly prospective for large iron oxide copper gold deposits. These are some of the press releases that came out after the National Drilling Initiative. I like the one Dr. Andrew Heap said, that analysis of the drilling data confirmed the East Tennant region had the right geology for a range of minerals, and particularly copper and gold. So it's a new, exciting frontier, copper and gold prospectivity, and that's just what we need. So we've got over 4,500 square k's of tenements in the green. That's the Astute Metals holding, and you can see it's a pretty tightly held region, juniors and majors alike. The orange, that's Newmont, and the blue out to the right-hand side of the image is Teck Australia. So it's some pretty sought-after ground. And that's because it's prospective for these world-class IOCG deposits. And if you haven't heard of these, it stands for iron oxide copper gold. We've got a bunch of these in Australia. We do pretty well at them. They produce the lion's share of our domestic copper production. Olympic Dam, which is right here in South Australia, is one of the largest copper deposits in the world. That's an IOCG. It's been mined since 1988. Ernest Henry is another example in northwest Queensland. That's been mined from 1998, around about 12 years open cut, then it went underground, and then after 20 years of production, it was still worth $1 billion, which is what Evolution paid for it in 2021. And as a Northern Territory example, this is a smaller example, but it's a high grade one. So Juno produced about 475,000 tonnes went through the plant, but an average head grade of 60 grams per tonne, 6.0. So you're talking almost 1 million ounces in less than 500,000 tonnes of dirt. It's pretty hard to beat some of the gold numbers that Simon was talking about earlier, but Juno's one of them. So you can see this is the size of the prize, and this is why it's a company maker. So we're on the path to discovery here in this region. The last bit of work that we've done, if you look at that image there, the background is a magnetic image, and we've done some geophysical modelling to look for gravity anomalies. Now, there's 3 areas next to 3 drill holes, and you can see there those hot spots are areas of dense rocks. IOCGs have iron oxides, which makes the rock dense, and luckily, density is picked up by gravity surveying. So we've put a lot of effort into that. We've done some pretty funky modelling where we've stripped off the effect of the cover rocks from the gravity data, and so we're looking at what it looks like at the basement. And there's 3 great targets there. I'll talk about Leichhardt East. This hole was drilled in late 2022. It was drilled testing a gravity anomaly. Since then, we've been able to constrain that model and we can understand better where it is. That hole actually intersected elevated copper and uranium up to 0.24%. So not ppm, you're talking percent, associated with iron. Now, we've regenerated that, we've done the work to do the constrained modelling, and you've got this whopping great target sitting right above where the copper's kicking up in this hole and where the uranium's kicking up. So it sits between 2 faults, if you look at the image on the right, and it's a really prospective structural position for an IOCG. But you don't have to listen to me about it. This image here on the left is from Geoscience Australia's website. And if you look at that circle on the right of that image, you can see there's a breccia. It's wedged between 2 faults, and they've got copper, they've got gold, and they've got uranium there. And if you look at our image on the right, we have a bullseye target wedged between 2 faults, and we've got copper and we've got uranium anomalism in a near-miss scenario. So this is an incredibly exciting target. I've been looking for these things for over 14 years, and you know, we talk about textbook examples of targets. This is a textbook example of a target. So we're looking to go out and drill that in June, July. It's going to be very exciting. So Nevada, we're exploring for lithium clays in Nevada. Now, lithium's kind of come off the boil a little bit, but it's a strategic decision to explore for these. You can produce a battery product at the mine, which means you get a value-added product. You're not selling a spodumene concentrate, you know, for $1,000 a tonne. You can sell a lithium carbonate for $15,000 a tonne. And so when it comes to producing lithium carbonate, they've got a relatively low cost of production, and they're large-scale deposits, which makes them very attractive. Here's some example of the big lithium clay deposits in the state of Nevada, and we've got actually McDermott, which sits just outside in Oregon. I won't go through all those, but you know, the deposits are up to 5.5 billion tonnes. They're huge, and they're lower grade compared to your pegmatites, but they can contain lithium carbonate up to 21.5 million tonnes. And if you look at the scoping studies, the DFS studies that have been out to date, they can produce up to 66,000 tonnes of lithium carbonate per year. So they've got the scale to be very attractive. You can see our projects are in red on the map there, and Red Mountain is the one that we've staked around about the middle of last year. We got on the ground quickly and did around about an 800 sample soil sampling campaign, generated an 8-kilometre long anomaly of lithium in the soil. We've backed that up with some rock chip samples, so we've dug down, we've sampled the clays underneath, and we're getting some very good grades, up to 2190 parts per million lithium. And that's a very good grade for these style of deposits. We're going to be kicking off our drill program in early May. We've got 1,500 metres, I've got 10 permitted sites, and we're setting out to establish the scale of mineralisation in the subsurface and the kind of grades that we can achieve. Now, rounding out the projects is Governor Broome. It's a heavy mineral sands project. It's a legacy asset. It's been in the company for 10 years. And so when I came on board about a year and a half ago, we had a look at this, we ran the ruler over it and went, you know what, this thing's actually got some real potential. What we need to do is do an infill drilling program, and we need to do a resource update and do a scoping study. It's exactly what we've done. We spent the last year doing that. And I was hoping to be standing up here talking to you about our scoping study. We're currently in a trading halt, but that should come out soon, so keep an eye on Astute. The project itself has great infrastructure characteristics. It's less than 100 k's from Bustleton, sealed road all the way, got a high voltage line through the project, and we've got 4 heavy mineral processing facilities and a deep water port at Bunbury, which is experienced in handling heavy mineral sands products, all within 135 k's. 101 million tonnes of JORC resources, most of which are just measured and indicated, and great heavy mineral assemblage of ilmenite, rutile, zircon, and we've done enough processing work to demonstrate that you can get this stuff out and they're marketable products. So what does an Astute investment look like? Well, for starters, in the next 3 months, there's 2 key opportunities for us to make a discovery. Both of these project areas have scale potential, and we've done the work to show that there's a good chance that we're going to have some success. So the first cab off the rank is Red Mountain, where we're going to be doing our maiden drilling campaign in Nevada in May. We're going to do about 1,500 metres of drilling, and we're looking to establish scale and looking to establish grade. Our second one is Leichhardt East, where we're going to drill that spectacular IOCG target in the Northern Territory in a completely new copper-gold frontier, and that has the potential to be an absolute company maker. And in the background is our largely de-risked heavy mineral sands project. So that's got 101 million tonnes of JORC resources, high-value mineralogy. We know we can get the stuff out and produce something that people will buy. Our scoping study is imminent, so keep an eye out for that one. So Astute's got an enterprise value of about $8.6 million, which isn't very much. You can see that we've got a couple of really good opportunities in the coming months to create value. So please take a look at Astute, consider an investment, and please come and talk to me at the desk. I'd love to tell you a bit more about these projects. Thank you.